What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is June 29th of 2022. Well, folks, I hope you are having a fantastic day wherever you are, because in today's video, we're going to be talking about what I feel is the elephant in the room for crypto markets, something that no one is talking about, but casts a major shadow on the future outlook of cryptocurrencies. And it has to do with the Grayscale ETF, or the existing GBTC product founded by Grayscale. We're going to be spending some time to talk about why this is a net negative, but first we'll kick off talking a little bit about the short term of the market here, talking about the previous price action over the last few days. So you guys won't want to miss this. I think it's going to be a very valuable video here, and if you like it, consider dropping a like. All right, so let's go ahead and kick off the conversation here, guys. Over the past couple of weeks here, since back here in mid-June, during the 17th to the 19th, where we had this heavy volatile period coming down towards the $17,600 range, we have been charting practically sideways here effectively since June 19th. For the last 10 days, retesting towards this critical range right below $20,000 here, setting in a slightly lower range here from what we had back here on June 15th, when the order book had a lot more support here at that 20K range, a lot of buyers putting bids there that eventually got filled and cleared through with the drop here back on June 18th. Since then, though, we have still been getting buyer interest, but slightly lower. I want to hit on that in a moment. But we're still seeing consistent resistance here as well in the short term. So when you're taking a look here at the daily here, all the while the past couple of days have been red here versus the past few days that have been green, I would definitely keep in mind here that yes, all the while there could be a chance here to break lower. I think it's much more likely that we could push sideways for a little while. We're not going to consolidate sideways as much as we saw back last month in the month of May, when we had this kind of near month-long period of sideways price action ranging around that big even level of $30,000. I don't think we're going to see that. I think we will see a more decisive move to the downside soon here, but don't get caught up trying to trade too actively during this range. It's not going to be favorable for most people because the market knows exactly when the majority of people are going to get bullish or bearish and try to trade the upcoming trend effectively. It's going to be probably very unpredictable here and come over the next few days. So I would wait patiently here. But if you guys want to know where my take is on this, what my stance is, I think that there is a good chance if we break in either direction, it'll probably come down here to the downside to some capacity. That's where I've got my bet here in the sense of the short term. We'll see how it plays out here. It's really a question of whether or not you can get a substantial daily close below this range, 19,800. But we're relatively close to that. We'll have to see how it plays out here. If we get another kind of major move here, we get buyers coming in, pushing up price back up to the high range here of around $21,600. Truth be told, we just don't know yet what's going to happen here. When you're in a sideways trend like this, either you trade the short-term waves here, betting on the short-term retest, and you have your stop set and play it safe. Now, one thing that is also making me think that we might see some kind of reversal here in the short term is that with the CVD here, market order flow volume came in this morning with a huge move down, but since then has really over the past couple of hours been relatively neutral here. This is the case for Bitcoin, and if I remember correctly, roughly the case here if we zoom back out for Ethereum, right? Not a significant decline here in the CVD, still holding practically where we were down here earlier this morning. So again, we're not seeing major sell side pressure coming into this range here. And what I think is really interesting as well, if we take a look at the ETH futures here, we can see on the liquidation tracker, there was a lot of liquidations being hunted here, exchanges trying to force out some of those hands essentially who didn't have additional collateral on standby. And of course, right after that big kahuna here, we had about 134 ETH getting liquidated within 55 separate events here, right? A clear hunt here on liquidations. We've been holding up ever since then. And as we've been remaining flat here, the longer we remain flat here on liquidations after one of these declines, makes me confident that they're going to start hunting shorts and riding it the other way. So again, it's a matter of not getting too confident in the short term and trying to make that bet that, you know, Bitcoin is going to 10K and you're just going to absolutely short the heck out of it, right? That can be really dangerous, especially after such a long decline here. It's not to say that price can't go down here in the coming days or weeks, and that's, to be honest, the opinion that I have, that in the next coming days or week or so, we should come down. But it doesn't mean we can't get a retest back up towards that range high, 21K. So just keeping that in mind, guys. Now, again, as you all know, if you're more of a passive dollar cost average investor, again, in this case, we are entering into a range here where it is favorable to start adding in. It is in the blue range here for the net unrealized profit or loss, which is putting us into negative territory here, where a lot of individuals who have realized profit or loss or essentially moved their Bitcoin on chain have now started to enter into more favorable negative territory, which is a sign that we're entering into capitulation. And all the while, we can see historically that, again, the lows get higher here. We have less time spent or dramatic declines into this negative blue territory here. I would advise that we not get too cocky and too confident here and wait for a retest down towards a familiar range like back here during 2015 or 2018 before we really heavily dollar cost average. And the reason why is because of the macro environment that's going on here. Again, I don't want to essentially say that these models hold no relevancy. They do. They hold a large degree of relevancy. They show very similar patterns in the past, or at least can showcase when capitulative signs are in, and that's usually a time where you can start to comfortably dollar cost average. But it's not an end-all be-all indicator to go all in, right? It wasn't here, for example. When we flipped blue here, Bitcoin's price continued to decline here. And that's the same here for previous declines in the past, right? We step into blue territory here at $325 in the 2015 bear market and went all the way down to 182. So it at least showcases us here that we are getting at a much favorable range versus the overbought periods and can set long-term positions. Take a look at the Plel multiple here, another indicator here. Are we in capitulation territory? Yes, we entered into it back here early June. The price has still been declining since then, or hanging in this range. I would expect that, like previous times, we're going to come down to that lower band, which is 0.28 on the Plel multiple. At a minimum, I think we're going to see that, and that's again going to come through the follow-through and sell-offs. Really interesting community chart here through the Pro Chart feature on CryptoQuant. Our data science partner is one of the ones that tracks the longer-term buyer-seller volume for taker volume orders, essentially people who are making market order buys or sells. And we can see here that we're slowly but steadily getting back up here into one of those ranges where it can be favorable to buy into that capitulation. We will have to see here. We usually see it top out here, bottom out here effectively during market peaks. We're going to see here whether or not we can get that opportunity here where market order sell side pressure really starts to come in here. Because again, we've got a lot of institutions who are looking to close out of positions, basically pay down debts and become more credit worthy. In this case, they're going to be setting limit ask orders as resistance when that market order pressure from other buyers starts to come in, right? And last but not least here, the last thing I want to talk about here, and this is really the topic conversation that I want to discuss today, is the shadow in the room here. Because all the while we can say that we're in safe dollar cost average territory here, especially for those of you who have a longer term time frame, and all the while we might range here in the short term and we're kind of keeping passive. I want to go ahead and talk about one of the biggest things that's going to weigh down the crypto industry in the long term. And this is something that really, like out of maybe like the top 5-10 things you guys are watching, this is one of those items you should be keeping an eye on. And luckily, the data is accessible. It's available through many tools like CryptoQuant, which is one of our partners here on the channel. And that is tracking the premium, or in this case, I think a more appropriate language overall across most of the data platforms is discount. We've got a discount here in the GBTC product and other similar ETFs or ETN products. So this is a very important conversation we need to have here. So GBTC, as many of you probably know, is an exchange traded note. It's similar to an ETF in some ways, in the sense that it's giving you exposure to some kind of asset. However, ETNs are limited in the sense of the capacity of who can buy them, what kind of funds, for example, pension funds, and a lot of other major money managers have access to this with, again, other people's funds. That's the important dynamic here of why an ETF is so big, right? Being able to come in and take billions of dollars of retirement capital and essentially get exposure to this new asset class, right? So that's why the ETF is such a big thing versus the ETN. But the ETN product, GBTC, has been around for a long period of time, and it's been one of the biggest financial instruments. It ballooned all the way to, I think, $30-50 billion back during the peak of the bull market. But since then has been not only declining with the market as expected, but even worse off, we've started to see, whereas in the past there was a premium here, basically a positive arbitrage opportunity where you could sell GBTC at a higher price versus the original Bitcoin. Now we have GBTC trading at negative territory, essentially meaning with the current rates that we have in the market here, if we take the existing GBTC product here, you can essentially buy Grayscale's GBTC, and it has the appropriate amount of Bitcoin backing its share at a 30 to 40% discount. For the past couple of weeks, this has been the case, and for the past couple of months to the last year and a half, this has been the inevitable reality here, as Grayscale bought way too much Bitcoin to actually satisfy the supposed market demand here. We can see here that just the other day here, we were trading down below here, the premium of minus 30%. So I apologize, I got my numbers wrong there a little bit. It's around the 20 to 40% range we've been hanging here since back in May. And even really taking it back here to the start of the year here, we were still at a minus 15% discount here, right? We were at a major discount here within the overall value of the actual Bitcoin. So effectively meaning for every $100 of Bitcoin within the ETF, the market is really only paying, essentially, if you want to take the 30% discount, $70, right? So that sounds like a steal, right? Why wouldn't you want to take that opportunity? And to be honest, there's an argument to be made there that there is a clear arbitrage here where you can buy in at a 30% discount on GBTC and hopefully wait for the premium to alleviate, and therefore not only make hopefully some upside return on Bitcoin, but that 30% margin. Well, it's clear by now that this discount has not been recovering, and it's just been getting worse and worse. And this is indicative of the fact that Grayscale has a lot of Bitcoin. To really put it in perspective here, Grayscale owns, still even after over a year and a half, nearly a year and a half of from its recent top at 655,000, Bitcoin has only declined here to 638,000. And that has been part of a slow distribution process of Grayscale trying to lower the amount of exposure for the GBTC product. Now, the reason why this has been such an issue for Grayscale here is that at the current moment here, existing investors in GBTC, and why an ETF would be so important is because there is no redemption mechanism, okay? So what this effectively means is that current holders of GBTC, right, of the shares, effectively can't withdraw it to physical Bitcoin and go sell it on the exchange. This would probably more likely than not in a very, very short window of time, start to alleviate that disparity between the GBTC product and the actual market price of the GBTC holdings. And this is something that was covered a little bit here in this Bloomberg article that came out just yesterday here. Now, when it comes to this decision on July 6th, some of you are probably hearing about it, that the SEC is going to have to respond towards the proposal from Grayscale to convert GBTC from an ETN to an ETF, right? This is the desired outcome of Grayscale. The fact of the matter is it's not very likely. At least it's not coming anytime soon, right? And at least that's how it's been for a long period of time. I don't want to say nothing can happen, right? There's obviously some kind of probability or chance. But if you guys have been around the block long enough, you guys know that the SEC has installed, and they will do everything in their power to stall that for as long as they can. They're especially not going to be doing it in this market environment, whether they're trying to protect retail investors or institutional interest. That's up for you to decide. I don't want to try to debate that. All we can see here is that Grayscale is unfortunately not going to get this. Now, what they talked about here is a little bit about this concept here. Back in the day, many funds like Three Arrows Capital, which is now underwater in the sense of its obligations, used to take advantage of this premium here. They would convert Bitcoin into GBTC shares and then sell them onto the market, effectively meaning to the demand and brokerage accounts where people wanted to buy Bitcoin. But now we're seeing the opposite play out here because there's so much GBTC shares and therefore the Bitcoin backing it, and not enough demand in brokerage accounts or other types of fund managers to go out and buy that Bitcoin at such a discount. This means that they've got an overload of Bitcoin here effectively, and they're trying to find a way to get that BTC off of the books, to essentially get it back out there onto the market. And unfortunately, unless Grayscale really starts to pick up the sell side pressure or alleviate some of the Bitcoin they have control over, we are going to see this discount probably prolong for a period of time until demand starts to meet towards that supply. So I think that this is a very important thing to keep an eye on here, because Grayscale is a massive company. It's one of the biggest portfolio companies of DCG, or the Digital Currency Group, which is one of the major Titan companies in the crypto space. So I think we need to keep a mindset of conservatism and passivism in this market, because it feels like whether it's Grayscale, whether it's MicroStrategy, whether it's Celsius, whether it's Three Arrows Capital or other parties affiliated with Three Arrows Capital, there's a lot of dominoes tripping off in the space here. And it can cause a cascade effect like we've seen in recessions like 2008 or during speculative bubbles like the dot-com wave or other previous crashes in other traditional markets. Crypto, at least in its current form, is not so different than those markets, especially with the amount of leverage and credit that has been in the system. A lot of the IOUs, under collateralized lending that's been going on, which is just, again, completely sick. That should have never happened in crypto. But it is what it is. We need to accept it for what it is, because we might be able to get some really great opportunities if we can remain patient and diligent. So, sentiment check here. Summarization, too long, didn't read. I generally think we're going to see prices continue to go down here with these macro factors, with this overt amount of supply in the market, not enough demand. In the short term, don't try to make any crazy bets trying to short the market here. More than anything, try to wait and get that buy side opportunity at that solid discount. Until then, for those of you who are more passive, dollar cost average, keep it simple. No need to overcomplicate it. That being said, everyone, thank you all so much for watching. If you enjoyed this video, consider dropping a like. I hope it proved valuable for you guys. And until the next one, I'll see you all in the next video. Take care, everyone.